And that's really, really good to exchange from traditional real estate into minerals, because minerals are like being a triple net landlord. I don't have to have any cost, any exposure, zero liability, zero capital, but I get a check every single month from the oil and gas sold off my minerals. So it has such similar factors of importance that these investors can relate to it. And it has really made a lot of investors say, this is not only a viable asset class, it's a desired asset class.
What's going on, everybody? It's Chris Naugle. Welcome back to the Money School podcast. And today we are going to talk about some really important things. You know, I know you're watching the news and you probably are watching what's going on with the Fed. You're probably watching how good the stock market looks like it's doing. But today we're going to dive a little bit deeper into the markets, into the economy. And we're going to really talk with an expert, a veteran in an industry that you should be completely fascinated with because you rely on it every single day of your life. You want to know what that is? Energy, folks. Energy. So if you don't heat your house, put gas in your car, or use energy, then just click off right now. But if you do, you need to hear about this because Troy and his family business has been doing this for a very long time. So I'd like to welcome Troy Eckard. Welcome to the show, man.
Thank you, my friend. Thanks for having me. I look forward to a great dialogue and sharing with everyone the value of energy, especially here in the United States.
You know, it's pretty interesting, Troy. I was just out in a mastermind in California, and I was spending some time with a friend of mine, Jace, and he and his family have been in the oil drilling industry for quite a long time in their lives. And we were just talking about the ups and downs in oil, some of the things he did when he was a kid. And you know, one of the things I love about Texans is you folks work. Now, I'm up in New York, right? I grew up working on farms. I've always had a strong work ethic, but I'm the rare one here. In Texas, everybody's got a cool story of when they were a kid, literally digging the ditch that never ended. And you know what? Texans fall in love with the digging more so than they do just the result of the ditch is done. You know, here in New York, it's like, how soon is the ditch going to be done? In Texas, you're just like, what other ditch are we going to dig? Well, let's just keep going. I love Texans' work ethic. And not only that, the industry you're in, the alternative asset industry, the energy industry, is one that is just absolutely fascinating. And I know a lot of people, the Green New Deal people, I know they think that, oh, someday there's not going to be a need for energy or oil or natural gas. We're going to go all green. And I want to talk a little bit about that. Now, there's no rules on this podcast, so you can say anything you want. That's okay. If we piss somebody off, like they weren't supposed to be here in the first place. And that's why people show up for this podcast. But, you know, I know you've been doing this for a long time, 1985. Now,
yeah, that's a long
awesome,
time,
man. 85. I remember that year. I was 6 or 7 years old. And that was the year that the movie Rad came out, that BMX movie. And it was a pivotal time in my life because that was when I found my first real love, and that was BMX riding. But that has nothing to do with energy. I just thought, you know, hey, let's talk about when you started. That's how long ago it was. And you've done so many different things. So can you just tell the audience a little bit about yourself, the business, and maybe just those, you know, the beginning years in 1985 and some of the things that have transpired?
Yeah, I can tell you right up front, Chris, the last 38 years seems like it's just flown by. I can remember being 17 years old, graduating high school, thinking, what am I going to do for a career? My parents were broke. I worked all summer long, three jobs to go to school to try to become a major in economics and finance. Went to college, lived in a travel trailer with more holes in it than a radiator, working 3 jobs, starving to death. Minimum wage is $1.85 an hour, delivering pizzas, doing landscaping, thinking, what career can I do that is exciting, that I don't mind getting up every day to do, that gives me unlimited potential and can let me use my creative brain to do it? I'm thinking, I have no idea, because to be an entrepreneur is one that says there is no rules. You know, I'm not worried about coloring in the lines. I want blank paper. I don't want to even see lines. And that turned out to be a great opportunity because I was asked to come to Dallas by a guy that had a small investment firm. And he said, look, you're starving to death in college. You're not making any money. Why don't you come to Dallas, work for my brokerage firm for the summer? I'll get your license. If it works out, I'll give you some money and you can continue college in Dallas. But you're starving to death and you're too bright of a kid to just work your way through college the way you are. I said, okay, I'll come try it. Well, I ended up liking the business because I got to tell you, once you understand oil and gas, it's worse than any kind of addiction you can ever have, worse than crack cocaine or anything else, because once you understand how important it is to the economy and that every two-legged mammal has to use your product every day, there's nothing else that I can do that compares to it. It has been a massive evolution, though, in 38 years. From like the movie, There Will Be Blood. I mean, guys that had fingers missing on rigs talking to me in 1985 and drilling this old well, sling and chain, to nowadays it's sitting in a computer room on a drilling rig that actually picks his feet up and walks like Skywalker. From that to this in 37 years is crazy, right? So it is a tough business. It is one that is very isolated and unique. And unfortunately for investors, it's about 95% full of crooks, liars, cheats, and thieves. So even
Troy,
if
hang on right there.
Yeah.
I'm so glad you got that out of the way, because that was going to be the first thing I was going to say is your industry probably has more crooks, liars, and thieves in it than almost any other one. Well,
except for politicians.
Yeah.
Except for politicians.
Politicians rank number one. I'd say Wall Street, the world that I came from, spent 16 years, and that's number two. And then, yes, oil and gas. Yeah, for sure. So I'm glad you got that out of the way. Continue.
No, and the reason why it is that way, Chris, is because you can't go anywhere on the web, internet, encyclopedia, library. You can't go to a professional source and say, I'm looking at this deal. Can you tell me how it's structured? Can you tell me, is it fair? It makes sense. Real estate, I can pull up appraisals and tax information. I got comps. And this is the only industry I know of where investors literally start putting money in, other than cryptocurrency, where you go, I have no clue what I'm doing. It's literally a leap of faith by the person that's talking to me, hoping to God he's not going to just steal my money in a Ponzi scheme or he's a complete incompetent fraud. And the history of it since I've been in it has just been this compound effect of a greater fool's theory. I'm going to sell you something I bought for $1 for $5. You're never going to figure it out. You're going to die a slow economic cancerous death over 5 years. By then, statute of limitations are worn out. You lost your money, and I'm on to my 9th company because I can set up an LLC for $300. So in my case, having been around since 1985, my fingerprints have been on file with the FBI since 1985 as a licensed broker, right? Then I bought my own broker dealer. I had that for 22 years. I set up my own company. I named it after Eckard, after my last name, because I was adopted out of respect for my dad. So my thought is, I'm going to be that outlier. I'm going to be the most transparent, blunt, Tourette syndrome speaking individual you ever talk to. And like you said, you either like me or you hate me, but there's no middle ground. But I will assure you, you will get 100% of my focus, attention. You will get 100% of my ethics and integrity. And I have no intention on going anywhere. Good news or bad news, you're going to get it just like it is. Most of you may not want to be around me, but those who do, I hope I do a tremendous job for you. We'll be partners and friends until you die or I die. Well, I'll be 60 this summer. I've lost about 90% of my older clients, but I'm now becoming as old as my clients were when I started in 1985. So the whole thing is flipped around.
And one of the things I want to point out, just, I don't come from the oil and gas world, but I come from the Wall Street world. And we both,
Sure.
Had to deal with I don't know what you want to call it, the Gestapo, the mob. It's called FINRA, actually, and that's
I'm very familiar with them.
We're both very familiar with FINRA, and FINRA doesn't play nice with anybody. Okay. They're always just looking to take the next person down and fee them to death until they got to close their doors. And then they take receivership of the assets. That's just the game. Okay. That's just, to take it for what it is. But to have survived in your industry under the regulatory body called FINRA for 38 years is literally an anomaly. It really, truly is. But not only that, folks, I want you all to think about this right here. So, because he comes from an industry that's got a bad name, a black eye, if you will, he's got 1,300 high net worth clients. So if he screwed something up somewhere in 38 years, one of those 1,300 people, and those are just today's clients, one of them is going to go out there and just blacklist them. They're just going to spend money that they've got because they got piss away money. And they're just going to make sure that Troy's name is forever blackened and nobody wants to do business with him. But yet, here you are, 38 years later, crushing it. That only comes with integrity. And that is just a hard thing to find.
Yeah, and I think the way I always make a joke, I say I'm only scared of three things: the SEC, the IRS, and my wife, and not in that order. So as a result, when I started off as a broker back in the 80s, I had my first brokerage firm around 1991. Well, the only brokerage firm I've owned. And I hired an examiner that used to be a prosecutor for FINRA back in the old NASD days, right before they changed names. And she hated my guts. She was my examiner to make sure I did everything right. And I go, you hate brokers. You hate brokers. She goes, yeah, I've seen such slime bags. She goes, so why did you hire me? I said, because you're going to make sure I'm doing it right, because you hate my industry. You hate brokers. You think we're all scumbags. And if you can do my compliance and make sure I'm doing the things right, then I know it'll pass any scrutiny anybody has. And I want to learn from you how to do it right, because I want to be around for 30 or 40 years. We've been friends now for 30 years. And she said, there's not a cleaner broker dealer. You hire a checker to check the checker. Now, I stopped having my brokerage firm back in 2009 for exactly what you described earlier. When the 2008 crash occurred, the examiners came in because everybody was reporting Ponzi schemes and bad news. And they came into my office and they were just pounding on me for like 2 or 3 days. Normally it was like a day audit and they were gone. They said, Troy's firm is the example of how private small broker dealers should be run, compliance, due diligence, off the chart. And I asked these two guys, why are y'all beating me on the head? What is going on? He goes, to be honest with you, Troy, off the record, all the big firms lost their value. Their fees are down. They want us to come out and clean you guys out, push the money up to the bigger firms and run you guys out of business. I don't have any brokers anymore. I don't need a broker dealer. So I said, I'm going to resign as a broker dealer. I'm going to exempt and do everything myself. I don't have any commission sales, which I haven't had since 2009. But you're right. FINRA is there for a reason. But as a self-regulating business, it actually harms the investors, in my view, because it does push a lot of small brokerage firms out that really have the client's interest at heart and shoves it up to the big broker dealers, which generally just care about fees, right?
That's it.
So it's a good thing, bad thing, but it's very destructive to an industry that private clients need that relationship. And they need specialists. They need a guy like Troy focused on only energy, not selling bonds, chickens, turkeys, and stocks, you know?
And I think that's interesting. And, I've made a whole career just like you have on being the expert in one thing. That is it. The heart surgeon is good at operating on hearts, so if you want to have your heart operated by your general physician, then you got about, well, I don't know what your percentage of survival is, but, they're like, well, I learned this in med school. I'm willing to give it a shot. I haven't done it in a long time, actually, ever, but I'll give it a whirl, right? Is that making you feel good about having your heart operated? Or do you want to go to the heart surgeon that has done thousands, if not 10,000s of operations with a high probability of success? And literally they don't even need to think anymore because the 10,000-hour rule, they just have it memorized. That is Troy. And I'll second that. And I'll say that's how I've gotten so good at what I do. I only do one thing, just like Troy only does one thing. And folks, when you get into investing, and I'm not trying to point you and tell you what to do, please invest in things that like, and understand, and also find people that are the utmost experts and specialists in the field. They will not just help you invest. They will then teach you the business so you know exactly what you're investing in. Like mineral rights. Like when I say that, what are you thinking? You're thinking like little minerals you pick up on the ground? We're going to cover that a little bit because a lot of people, when they hear that, they don't even know it, but yet people will blindly throw money into investments, that just says oil and gas or says minerals or stuff. But do you know what you're investing in? Do you know where the money can be made and where it can be lost? Do you know the risks? These are such important things. And I think, Troy, when I saw you talk, that's what I honed in on. You were more of an educator than anything else. You just wanted people to understand it because the business that you're in is so fascinating. You just can't understand why everybody doesn't just want to learn everything about oil, gas, and what you do. But clearly people have other alternative things like green new energy, right? And windmills, and every car on the road is going to be electric. So can we just pivot real quick, Troy, and talk about green energy? I know it's the hot topic. I know the dude in the administration in right now, like that's what they want to talk about. But you and I both know something that maybe a lot of my listeners don't. I'm not poo-pooing on green energy any way, shape, or form. But folks, the reality, the facts are, you can't have green energy yet. It's not ready. It won't be ready for a long time, if in our lifetime. Can you just talk a little bit about that? Because I think people need to hear it from the horse's mouth that oil isn't going anywhere, and it's not a bad thing.
I think I'm a pretty simple, street smart South Texas guy, and that is, I don't listen to the arm waving. I look at the result of empirical facts and common sense, right? So let's just talk about it. Everything in this room behind me, the chair, the shirt I wear, the microphone, it's all made from a residual byproduct of oil. So you can have solar and wind, and you can try to remove the transportation side of fossil fuel consumption. But there's not a single product that will replace every single item in this room, which is made from a refined product. So the practical sense is there is an initiative taking place. I think this whole COP28 and we're going to have a methane reduction and all these countries want to reduce this. Look, this is like a fad. And the fad is now up to about $10 trillion of wasted money because there's no way green energy is going to work. And here's why. At the end of the day, you can have the ripest watermelons in the fruit market. If nobody can afford it, your watermelons are going to rot. When you look at the cost of green energy per energy unit, solar and wind today requires oil to be over $150 a barrel to be par. You didn't subsidize it. And what they're trying to do is transition the consumer's thinking, which is we want you to get on trains and mass transit because we want to control your movement. We want you to electric cars because if we get outside your grid, your car turns off. It's about future control. They want to tell you what home to build, what size to build, where to build, how to be on the grid. This is my view. This is about transitioning over the next 20 to 50 years, human activity and human reaction to the economy and what they want you to think. In a combustible world, your car can drive anywhere in the US. In a combustible world, I can have anything I want off the grid because I can manufacture my own water well, et cetera. In a short summary, what's happened in the last 18 months because of rising inflation, it has completely eliminated, in my view, the economic viability of green energy. It's destroyed it.
Completely.
Other countries who were going green are going, screw the green. We're going back to drilling. We're buying coal. They're looking at nuclear.
Europe.
How scary is nuclear? Example. How scary is nuclear that the first thing that Vladimir Putin did in the Ukraine war was went straight to the nuclear plants to control them and was shooting bombs in a nuclear plant. I want nuclear nowhere near me. I'm talking 8-10 states away. So if your idea of green energy is green energy like solar and wind and hydrogen, and your next alternative is nuclear because you dislike fossil fuel so much, get butt naked, stand on a dirt road, and give me sign language. Otherwise, you're using a barrel of oil, which means it's never going to happen in anybody's lifetime that's listening, ever.
Yeah,
ever.
And it's interesting, and I study economics like a freaking nerd. It's actually a problem.
Okay. I do too.
It's just a problem. And, I read all these data points, about the grids and electric and, there's hardcore factual data stating that what the government wants, like their goal, I can't remember exactly what the number was, but X percentage of cars on the road are going to be electric. We won't have electric at all if that actually happened, because the grid will completely crash. None of your electric cars will ever leave the garage. Your house probably will not have heat, electric. You won't have air conditioning in California if it's nice and warm, because it'll all crash and burn. You can't do what they're trying to do, which leads me to believe, like, what is this ploy? Is this just to get people excited so they want to vote because they think they actually have the ability to change something that is not freaking broken? That's the thing. They can make cars so clean using oil and gasoline that literally it will always be cleaner than a green energy electric vehicle, because pretty much they brought back slavery to in those mines to mine the metals and all the stuff that make the electric batteries, electric car batteries. So, like, where is that humane? It pisses me off, Troy, but anyway, I know we're not here to talk about that. We're here to talk about opportunities in oil and gas, but I'm trying to make the point that the fad, as you referenced, will be gone. I don't know if it's next year, the year after, another 8 years, but
within a decade.
Within a decade, the fad will be gone, and we'll be back drinking from the Kool-Aid of oil, which never was broken. And here's the cool thing. You know this better than anybody, and I've read so much about this. The United States of America, the greatest country in the world, the land of opportunity. I know some people disagree, but we have enough natural resources in this country to be self-sustaining. Completely self-sustaining. We even have enough resources to grow our population so we don't do what China is doing and what Japan did, 2 decades ago, where population, they age out and they can't grow anymore. We don't have that problem here. We have a political problem. We have an agenda problem. We have a mind-warping control problem in this country. That is it. Like, from a resource standpoint, we have everything we need. And that's why your business is so fascinating, because hopefully in a decade here or sooner, we come back to the realization that, like, everything we need is right here, and we just got to harness what we have and do it better and stop fighting it.
Well, what's scary is the information, the news that never gets out to the average listener is we are not just successful in oil and gas exploration like we've never been before. We're the number one crude oil producer right now, 13.1 million barrels a day as of this week. Here's the part most people don't know. We're exporting, we're selling our oil, exporting 4.7 million barrels a day of the 13 million barrels. Now watch, we're consuming 21 million barrels. We're have a trade imbalance. We're selling our crude oil abroad, 4.7 million, and we're importing roughly 14 million barrels a day.
Yep.
Say, wait a minute, why would we sell 4.7 and we still import 14?
Because we don't have the actual product. We don't have the refineries here.
And trade imbalance. What causes chaos in the Middle East and what causes all this disruption in the world is that when the U.S. 4 years ago went from 10 million barrels a day production to 13 million barrels a day, we don't need 3 million barrels from OPEC anymore. Well, there goes their customer. But we're also delivering 4.7 million barrels to their customers more reliably and better. Saudi Arabia and OPEC just lost 7 million barrels a day. The 3 million we're not buying and the 4.7 we're exporting. So this is Middle East chaos because we've been subsidizing the Middle East and OPEC for the last 50 years. And they don't know how to make an economy work by producing glass from sand, which is their main product besides oil. So, and that's jokingly, but I think the issue is much bigger things are at play here than just supply and demand in energy. So the key for me in my business we're up to like 1,700 partners now. The key for me is we're looking at 9 oil basins in the United States contain the majority of the crude oil and natural gas. Those that own the natural resources, the mineral rights, they're like everybody else. They're trading and selling those minerals as they become more fungible. Whoever owns those, you will own the rights in perpetuity forever, the oil and gas in that minerals, and they can last 100 plus years. So to me, it's like, it's a very limited amount of quantity of oil and gas saturated minerals. It is going to be something that lasts for decades and decades, but it is evolving where they're coming less and less, but higher in value as a result of the barrier to entry. So it's a really unique market, but it scares the heck out of most investors. They just don't get it, and I understand, but it is an asset class all into itself.
So let's talk about the different ways that individuals could invest in oil and gas and mineral rights and all these different things. Because I think where a lot of people, where the risky drivers in the industry steer people is they steer them to, these new wells that they're going to drill, these new, pretty much like, here, we know there's oil here. We're just going to drill for it and we're going to strike it and you guys are all going to get rich. And then they never hit or they never even get started for one reason or the other, but they sell the promise of tax deductions. Your industry is very unique because it is one of the few that has tax deductions. Correct me if I'm wrong, please, because I'm not an expert in oil and gas, but it is one of the few industries where, let's say somebody exits a large real estate complex and they make a huge profit. While the 1035s are still around and the money can be exchanged, they can exchange into these types of projects, specific ones, legally. Instead, you don't have to move it into another real estate deal and buy it at the highest point. You could move it into what you do, which I think is fascinating. And I think it is there's so little information out there about this.
Yeah, we were quite shocked at how many investors did not know you could do a 1031 tax exchange.
Or 1031, I'm sorry.
Right, 1031 traditional real estate into minerals, because most people don't know that mineral rights are truly deeded property. Mineral rights are deeded property severed from the surface, and you file them, you deed them, you record them, and they're yours just like a surface piece of property, right? But we saw that being recognized a little more in the last 36 months as everybody was trying to exit at the top, dumping those high-priced real estate, scraping that profit. They were like, but I don't want to buy somebody else's high piece of property. So through education, podcasts, and information being out there, we've had a number of partners put in significant money from 1031 exchanges. And that's really, really good to exchange from traditional real estate into minerals, because minerals are like being a triple net landlord. I don't have to have any cost, any exposure, zero liability, zero capital, but I get a check every single month from the oil and gas sold off my minerals. So it has such similar factors of importance that these investors can relate to it. And it has really made a lot of investors say, this is not only a viable asset class, it's a desired asset class, which has been why we can hardly keep any minerals available, because they keep getting sold out so fast.
Yeah. And I think a couple of the folks listening, their ears perked up because you said one thing, you said income. So that's a thing that a lot of people maybe don't understand that I really want to hit. The mineral rights basically in perpetuity. So you all understand that there's oil in the ground. They've got producing, wells that are pumping oil, producing income that you can tap into. And here's the most fascinating thing I recently learned. Again, not an expert in this, but when one starts to kind of produce a little bit less, a lot of times they can just go sideways, and then they just find another one and another and another, and they just turn them on, and it's all within that same piece of property. And so it's almost it just keeps going. It just keeps flowing income. How consistent is the income when it comes to this line of work?
So think about these new oil and gas wells like having a case of 3-liter Cokes. In the old days with vertical wells, it'd be like getting small 16-ounce Cokes. You pop the lid off, pressure comes out, Coke fizzes to the surface. That's what we were drilling. We were drilling thousands of little bitty vertical wells that might have 100,000 barrels of oil in it, but you get back a ton of the initial oil in the first 2 or 3 years, then it go dry after 7 or 8 years. So we were just on a treadmill. Today, the horizontal wells have the same concept. They're loaded, they're full, but I have the much broader opening at the top of a 3-liter Coke. And when it surges or produces in the first 2 years, we can make 45 to 100% of our money back in the first 24 months. Now, why that's relevant is you still have 85% of the reserves left in the ground. So the key question that got really removed about 15 years ago is you didn't have to go to an Exxon meeting or a large oil companies meeting and say, what's our percentage of dry holes? Because you're hitting 99% of successful wells. The only wells that don't work, you might have a mechanical issue. Other than that, you're making a well every time. But and I'm going to give you a number that's going to blow you away a little bit. So like we're mainly in Oklahoma. And these geologists, geophysicists, they'll come in and say, look, in the northern part of the Anadarko Basin, Oklahoma, there's 50 million barrels of oil equivalent per square mile. That's 640 acres, right? When you get a little further south, this thing is like a modern day Grand Canyon. You get further south, it's as much as 250 million barrels of oil equivalent per square mile. So the difference between today and tomorrow is using today's technology, commodity price, and the cost to drill, we can only get out 6% of what's in place. But over the next 30 years, we might get 8, 10, 12, 15%. And that's what makes it so exciting is, you're right, you drill a well, it declines, economics come back, engineer comes back, geologist come back and says, we thought we could only get 400,000 barrels out of 2 wells. It looks like we really get 500,000 barrels, but we have 12 wells to drill. And we found another zone. So the idea for this country is that technology, which we're always on the cusp edge of creating, the fact that we're entrepreneurs means we're willing to take risks, which caused the discovery of these horizontal wells, has allowed us to access these oil-rich basins. And like I always tell my clients, we're barely in the first inning of a 9-inning ball game, because the fact is what we're doing today is so much better than what we did 3 years ago. And what we'll do in 3 years from today will be much better than what we're doing today. It's just better and better, improved wells, better recovery. And that's the advantage. We have cutting edge technology helping us drill wells where before we were just hoping we hit 5 out of 10.
That's fantastic.
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action like so many others have by going to privatemoneyclub.com and sign up.
Back to the income, because of what you just said, if someone invests in this and they're looking for income, let's say they're getting ready to retire, they're seeing the stock market, we just broke all-time highs, touched all-time highs today alone. It blows my mind that we could even do that in an economy that is absolutely not strong and in a market that is so overly manipulated and speculative that I can't believe the average person can't see that. I mean, the Magnificent Seven should tell everybody what that means in the S&P, but people are looking for exits out of the stock market, just like they're exiting out of real estate, because you're at all-time highs. Warren Buffett said it, buy low, sell high. So they need that money to go somewhere. But a lot of these folks are looking to retire and they need steady, predictable, consistent income. Is oil that, or is the mineral rights that?
Yeah, what I do, Chris, I tell partners this way: look, you're buying a mineral interest that's going to have a well on it. The well will have less oil and gas in that reservoir tomorrow than it had today because you took some out of it, right? It's the only natural resource on the planet that when you burn a barrel of oil, it's never going to be another barrel of oil. You pull out gold or silver, it's still there. It's just in a different format. So because of that, you're going to have this decline curve, but you're sitting on a mountain of oil and gas, so new wells will increase that decline, increase that revenue. But what I tell clients to make it easy is, if you can take $1 million and go buy a bunch of rent houses, and those rent houses generated enough revenue, you had your $1 million back in 5 years, do you care that it's on a decline of rent if you know from the 5th year forward it's all 100% return? It'll last for 25 to 100 years without any capital cost or exposure or any risk? And every answer I get is, well, hell, I do that all day long. I do as many of those as I could. Well, that's minerals. The way we look at minerals is, if you buy them the way we do, you buy them, you look for 11 to 20% cash on cash return. We hope we get 100% of our capital back in the first 60 months, okay, maybe 72 months. After that, I've got my money back, and I've got these mineral producing assets with passive income. I get 12 checks a year and a 1099. It's the simplest, most passive investment out there, but they'll last for 25 to 100 years. That is what makes it so appealing. And I got to tell you this story, because when you've been doing something like I have for almost 40 years, and you start off drilling high risk oil wells back in the 80s and 90s, what I've heard in the last year, it literally almost brings tears to my eye when I talk about this, because I've had clients come in and say, Troy, I've retired because of you. I had a partner tell me last week at our fall dinner, he said, look, I got to tell you, I started with you 3 years ago when oil was $40 a barrel. We have so much income every month coming from your minerals that you put us into. We don't touch my wife's retirement. We don't touch our Social Security. We don't touch our other assets. We're living our lifestyle and better off just the income every single month we get from your minerals. Never in our lifetime do we think we'd be in this position. It's because of what you did for us. Now, to me, that's my driver. If I make my clients successful, I'm going to be successful. If I put my clients first, I'm going to be right along with them for that successful ride. And minerals, I'm telling you, I have sold a ton of my own other assets outside oil and gas to put more money in minerals, because I'm in the same boat. I'll be 60 this year. I don't want to hear about the toilet and the wind damage and the property tax. I just want to check every month. And it's just fantastic. This opportunity now is available to high net worth investors, because it wasn't 10 years ago. It literally wasn't.
So define high net worth individuals. So like people that would be looking at this as an opportunity. Like, is it who is it? Is it 50,000, 100,000? Like, where do they need to be investing with you in this?
Well, if you have a client that's probably, if you have an investor that's probably sub $2 million, they probably need to go buy minerals and publicly traded stock companies that trade in minerals. And the reason that is that you can't build a brick house if you can afford only one brick, right? My view is energy is not what I call a drive-by investment. It's like Vegas. You're playing a great game of blackjack. Somebody comes in and messes your game up, throws $100 in, right? That's a drive-by investment. This is not something you go, well, let me try 25 grand. I'll do another one in a year from now. You may win and you may have a good result from doing that, but you're really not doing what's necessary to build a strong net worth and portfolio. Every investment you have is directly responsive to what energy prices do. Donald Trump did not help the oil industry in his last year during COVID because he liked $55 oil. Cheap oil, strong economy. High oil, bad economy. So the truth is, if I want to balance in my portfolio, I better have oil and gas directly in my portfolio to offset what's going to happen in the rest of my investments. But if you look at the income side of it, how do I look at income if I'm trying to retire, sell my business, or create that passive income source that not only lets me live my lifestyle, but refuels my battery so I can invest in other assets? Well, I want to go buy minerals with tenants. You're the landlord as a mineral. Tenants like Exxon, Chevron, Occidental, et cetera, that are going to go spend hundreds of millions of dollars to drill wells on your property for free. And by legal statute, they've got to pay the royalty owner, the mineral owner, first every single month for every drop of oil and every molecule of gas. What other asset do I have billion-dollar tenants like that pay me first every single month for the next 25 to 100 years? It does not exist. The biggest question I get, Chris, is what goes wrong? What can happen wrong? And the answer is, I'm Leo DiCaprio and Catch Me If You Can. I'm a crook, I'm a liar, I'm a Ponzi scheme guy, right? That's first. Second, I'm just a complete moron idiot. I don't know where to buy minerals, right? And the only other third risk I can think of is some mad scientist comes up with a little pill, drops it in a glass of water, and goes, that turned into energy I can burn in my car. So some kind of unknown energy source can replace oil and gas. Again, it can't fabricate what's behind me, but it might replace transportation. So that's really your three risks. And I think we're at about $650 million of minerals that we've acquired in the last 36, 40 months. We're going to cash flow about $65 million free cash flow this year. No fees, no back ends, no reversionary. Next year, we'll generate about $100 to $125 million in free cash flow. And that's on $650 million worth of assets that we own. We're probably the largest single private owner of minerals that we know of in the United States. By next year, I think we'll cross over $1 billion owned by ourselves and about 1,700 clients. It is a system that works because it's so fundamentally simple. Simple. Real estate, billion-dollar tenants, cash every month, no risk. That couldn't be better.
I love it. I love it. So I love that you covered the risks, and it just brought this one thing up. And I don't remember if it was 80s or 90s, but there was a guy back a long time ago that made a car that ran on water. You remember that? Was that the 90s?
It was like in the 80s.
80s.
They never found his body.
Right. I have to imagine somehow he was floating down the Hudson the wrong way. I mean, so is that one of the risk mitigation strategies? I don't know, but I'm just saying, if they have the technology to make cars run on water, that's a risk. But for some reason they had it back in the 80s, but we haven't heard about it until I think recently. They might have a Porsche or something that they were testing like that. But I just thought that was funny.
To be candid with you, we do need alternative energy. I mean, and the reason I say that is, look, we live in a sensitive planet. I think all this nonsense about the climate's a bunch of BS. I think that the Native Americans had it correctly. You move as the weather moves. You move as the earth rotates on a different sphere. And the buffalo are here today and they're gone tomorrow. And the water's here today and it's gone tomorrow. We're hard-headed, arrogant individuals. We go put our flag down and say, I'm living in Las Vegas where there's no water and I'm pissed off. I can't water my yard. You're in a desert, dummy. You started off in a desert. It doesn't get better. In our case, there is geopolitical risk, okay? The majority of the world's oil, other than 13 million barrels in the United States, all that oil comes from some of the most hostile countries on the planet. If you don't think geopolitical risk is out there, you're nuts. So if we're burning 103 million barrels a day in consumption and 13 million barrels is produced in the strongest democratic country on the planet, and that's still 7 million barrels short of what we need, all it takes is a Russian war, an Israeli war, disruption in the Straits of Hormuz, oil's $25 to $50 a barrel higher. So to me, I want to invest in, I think Peter Lynch said it best back in the 80s. If you can't draw it with a crayon, don't invest in it. My strategy is if I can't see it, touch it, kick it, or feel it, I'm not investing in it. I want to go see my wells. I want to know where they're drilled. I want to see what the oil check looks like. I want to know my investment is tied to something that I can follow the process from start to finish. I want it deeded and titled. I want it in my name. I don't trust anybody when it comes to managing my assets because people get enamored with their own success and they get a little greedy, and that greed turns into catastrophic results for investors. That's a fact.
I think you mentioned geopolitics and geopolitical risks, and I don't think a lot of people fully understand that. You say that and they think they just don't know. So if I may, folks, if you're really looking for a good book to understand, geopolitics, there's a book called The End of the World is Just the Beginning. Great book. It covers a lot of ground. Oil's in there, but a lot of the stuff that I talk about, when it comes to oil and green energy and the relevance of both, is from this book. I think, if anyone's looking for just a good book on that, you get a lot of knowledge out of it. Have you read that one?
I have not. I've read several books that speak to the same subject. Back in the 90s, if Saudi blinked or there was any kind of military concern, oil would jump up $25 a barrel. Now we got two wars going on and we're at $72 a barrel this morning. And that is a function of the normalcy of geopolitical conflict in the world. But with everyone's supply and reserves and the lack of capital infrastructure over the last 10 years, where it's at today, you have one serious disruption in global supply, you'll be 2 to 3 million barrels short a day. You're talking about oil at $125 to $200 a barrel. And that's not just exaggeration. That's what the numbers tell us, right? So I think when you talk to your clients, obviously you've got a very storied background. You're super successful. You've got clients that you manage money, your career. You're up there talking to successful businesses like myself all over the country. But there's one thing we all have to remember. It's the fundamentals of what runs an economy that I have to focus on. The arm waving, the politics, the Hunter Biden, all that all sounds great. At the end of the day, I got to figure out what keeps my network from failing, where I put the seeds of my capital going forward, that they'll grow and be harvested at a higher value than what they are today. I think most investors have lost sight of that. They went to the dot-com era in the late 90s. They sold out to these financial planners. And no offense to anybody you're working with, these masterminds, that's a name for BS, because 9 out of 10 masterminds that I listen to, they represent 20 ideas, 20 sectors, and multifamily and crypto and this. And if you sat down with them one-on-one, they basically couldn't get past a third grade level of knowledge of the asset they represent. So you and I, and more sophisticated investors, we have to listen to everybody so we have a ruler to measure, but we have to have a linear focus on what we know has to be the fundamentals of an investment before we even take any consideration. I'm talking to so many clients right now that have lost a substantial amount of their net worth in the last 18 months from Ponzi schemes, failed deals, ghost accounts. It's really, to me, it's 4 times worse than it was in '08 right now, Chris. It really is. It's horrible.
I agree. And a lot of those folks that are, wrapped up in these things, I feel like, there's a lot of books that have been printed that they should have read. One is The Richest Man in Babylon. Just follow, like back then it was the laws of gold. I redone it, the 6 laws of wealth for my daughter. Like, it's basic fundamentals. You want to build wealth and you want to stay wealthy. The rules are very simple. And one of the rules is learn how to protect your assets, learn how to protect your wealth. And it's very simple. Invest in things that you know, like, and understand. Don't get greedy. Be realistic with your returns. Listen, too many people over the last 12 years, almost 13 now, and the longest bull run in history, have literally just gone out and thought all they're doing is swinging for the fences like Babe Ruth. But Babe Ruth struck out a lot. And most people can't handle striking out that many times. And that's what's happening right now. They're shooting for the fences and they should just be bunting and hitting base hits. That's how you stay in the game long. That's how you protect your wealth. And for crying out loud, folks, if you're listening to this, I'm talking straight to you. Stop investing in things that you don't know, like, and understand. I've said that a lot in this podcast because I'm trying to get it to sink in. Like, Troy knows, likes, and fully understands everything he's talking to his 1,700 clients about. And those 1,700 clients probably know, like, and understand what Troy's talking to them about because they've taken an interest in it and invested their money. If you're not doing that, you're making one of the biggest mistakes of your life, because we are about to go off a cliff. And I don't mean a little cliff. I don't mean Niagara Falls. I mean a monumental cliff. I don't give a shit what Jerome Powell says about a soft landing. The shit ain't happening, folks. And if you're buying that bullshit, then you might as well check out right here, because the bullshit line ended a long time ago on this show. So just get realistic with yourself and start just looking at the facts and use logic instead of emotions. And you'll get a lot further.
I agree with you 100%. That's exactly what I think happening too. Right now, we're being manipulated by Fed funds and stimulus, and we got government policy being directed. And I think Powell's been getting a lot of pressure saying, you're going to stop raising rates. You're going to hold tight till after this election, or you won't be around. And I think this is a 1977 repeat. It's just a deep breath, and it's going to be unbelievably staggering. It's going to be nasty. And I think the thing is, what you said is the way I feel, which is everybody won from 2011 to 2018. Everybody was a winner, right? From 2018 to 2021, 22 was when all the fraud occurred, because everybody thought, hey, I just got to throw money in multifamily and it's all going to work out. I'm going to find the next fool. And now what they're finding out is all the gains they thought they made from 2011 to 2018, it's gone and more, and damages. And the problem is, like my own securities attorney here, I go, hey, I got another Ponzi scheme. I want you to represent some of my clients. He goes, Troy, I can't find the time. There's so many Ponzi schemes and so many bad deals in the woodwork. I go, is it worse than '08? He goes, 4 times worse. He goes, it's insane. He said, I can't get prosecutors. I can't get state securities guys. They're all working at home. The SEC guys are still working at home. He said, we got guys that turn themselves in Ponzi schemes, and I can't even prosecute the case because they're still at home. And I said, all right, so in my view, here's the way I view it, and this is the way my brain works. You cannot stop a drop of water that hits on one side of the bridge and goes downstream. That drop is gone. You cannot correct what you've already done, but you can't cower down and hunker down and hide in this economy, because in a falling economy like this, opportunities are going to be abound. You must grow up, get yourself by your bootstraps, say, I screwed up, I lost $1 million. I can invest smartly and make it back, and I can learn from that lesson, or I can sit here and cry and whine about it. Then I'll miss the upside of this opportunity, and that's a double damage. That's really what I think podcasts like this are about, is saying you cannot change what you've done, but you must listen to those experts that can help you recover and make smart decisions going forward. And that's really what I think is most important right now, is for us to be, kind of like my kid when he fell down and tore his kneecap. All right, it hurt, get back on the bike. You got no choice. You're going to learn to ride it, because If you don't, you'll never ride that bike again. That's where I think the investment climate is. I am talking to so many doctors, lawyers, dentists, bankers that just got hammered. I'm like, you have no choice. You're going to have to do the right thing or it's going to be double damage. What do you want to do? Well, I just don't know if I have the guts for it. Well, I can't help you then. If you can't get back on the bike, I can't help you.
Oh, that's well said. And I think we're going to see a lot more of that. I mean, the best of the show hasn't even happened. You know, we're literally still at the beginning credits, you know, that you go sit down in a movie. You're like, when does the movie actually start? We're just watching the credits, man. These are just like the previews of what's to come. Like the movie hasn't even started. And Jerome Powell, I got it. And I know we'll wrap after this. I know we're going long, but when I saw, like, I do a show every Wednesday called WTF, What the F? And, you know, I kind of said, all right, they're going to hold rates. They're probably going to hint that maybe there'll be some, you know, they'll hold rates longer, you know, but they might drop them next year because it's an election year. I mean, that's to be expected. But to have him come out and say what he did literally tells you that he is marching to the beat of the wrong person's drum. Now, I don't like the Fed. I read The Creature from Jekyll Island and all the books, The Secret from the Fed. Like, I know what that thing is. But, but the simple fact that literally what he did yesterday defied everything he has been saying for the better part of over a year.
Yep.
Like, which tells you that there's something else going on. And that messaging he gave yesterday, look what it did to the stock market. The market's been rallying. It is the biggest trap I've ever seen in the stock market, ever. You have the biggest house
short number two is going on.
Oh, my, beyond.
They're getting everybody back in the market to prop it up so their buddies can get out.
Oh my God. I've been buying treasury bonds, long-term treasury bonds now for the better part of a year, a little over a year now. And I've been bulking up huge because I knew eventually we're going to go into a recession, a deep one, and they're going to drop rates. But I had no clue that they were going to cower and start to say that we're going to drop rates X amount of times next year. Like, that was off the chart. I mean, treasuries have skyrocketed in price, which is good. But the other thing too, that I think is really worth talking about is right now, a lot of people, you know, they've got this FOMO going on. They think that every penny they got to have it in some investment or they're going to miss out. Like, I can't think of a better time to just sit back on some cash. You get paid for having cash right now. This hasn't happened in a long time, folks, but you get paid for cash, you know, and you find people like Troy and you start to learn things, but you don't have to be in a rush. I think that's one of the biggest mistakes people are going to make moving into where we're headed to, because I'll tell you something, like, I don't like the smell of what's coming next year. You got an election, you got a lot of political tensions, you got, holy crap, you got wars, you got everything else. Like, none of this, including the inverted yield curve, spells the right outcome for anybody that is thinking things are going to be okay.
It's like watching a magician. We're watching a sleight of hand. What you're seeing is not what's happening. It's just what they want you to see. I have a simple inflation observation. Ready? I call it grocery cart inflation. Go to the grocery store a year ago, carts were about 3/4 full. You go to the grocery store now, they're about half full. You don't have the Gatorades hanging off the side by the soccer moms. You got people coming with half carts, and you got people putting stuff back. I'm talking not in poor neighborhoods, in regular neighborhoods. And to me, the grocery cart is indicative of the amount of inflation and what that economic pressure is. And right now it's about half full, which means we are a long way away from being out of inflation. All they're doing now is they're going to push us into hyperinflation by drawing that rate back. And so
100%.
I think the problem is guys like you and I, we get it, we understand it. We're trying to pound the message. But, you know, the guy who says the truth sounds so negative. People run from that negativity because they don't want to hear the bad news, right? My joke is to my clients, hey, when your neighbor comes over and says, hey, I saw your wife coming out of your buddy's house next door smoking a cigarette at 3 o'clock every day for the last year. Yeah, they just play poker in the afternoon. Sure they do. Okay. You got to look at the obvious. And that's why my clients go, hey, oil's dropped below $70 a barrel. I said, I know, I told you 3 months ago it's going to go to 65 because they're artificially inflating it. Well, what does that mean? It means we're buying minerals cheaper than we've ever bought minerals because the seller's at 65. We should buy more. Oh, yeah, that's what it means. Well, come on. It's economics 101. We got to roll. We got to go. Let's just, you know.
But it's the opposite of what people do. I love that you said that. Like, I was just having this conversation out there in California about this. Like, it's a great time to start buying minerals right now. But, like, what are people buying right now? Crypto. They're buying Bitcoin. Why? Oh, because it's at 40,000. It's going to the moon again. Here we go again. If you didn't learn the last time, crypto and all of them are correlated to the markets. And I just shorted the markets today. I shorted the NASDAQ because I think I'm going to get it right this time, because there's no way it's going to break new highs. And even if it does, it's going to be short-lived, and crypto will probably lead the markets down or trend the markets down after. They're correlated. But yet this is when people want to buy, when it's the worst possible time to buy. You should be looking for things that are inexpensive, things that you can buy in a value. Minerals, anything around oil right now is what I would say would be a really good buy. It's an opportunity. And man, I could just keep going. I don't want to keep
What's your thoughts on the U.S. dollar? Because there's a direct historical correlation between the dollar value and oil, and it's actually been artificially interfered with for the last 24 to 36 months because of the stimulus, right? But if you look at what oil did today, it popped up about $2 to $3 today, and the dollar's down to like 102. I think earlier when I looked at it today. But if you look at the pattern back in 08, that dollar is headed below 80,
Absolutely.
Which was oil at 145. And so if you can get past, like I said, the arm waving, and you're talking about a 24 to 36 month strategy, if you move fast enough and start assuming that the dollar will be below 90 and that oil is probably going to be north of 100, it'll change your entire perspective on any stock you're trying to buy in the stock market. If you factor that in, you might take a 25 to 30% discount on any stock. And that's kind of why Warren Buffett is buying Chevron and Oxy, spending $50 billion, because he sees the same thing. He's the smartest guy on the planet when it comes to stocks. I don't need to have a financial advisor per se. I need to follow Warren Buffett, at least have a concept of what he's doing. Then I can talk to my advisor and go, let's try to follow the smartest guy in the stock market. He seems to know what he's doing.
And I think a lot of you listening to this should really have those hard conversations with your advisor. Pose these hard questions. Tell them, I don't want to go into the markets. I want to follow where the wealthy are putting their money, and where are the wealthy putting their money, and then see what they say. And I'll even urge you this: ask them why they didn't put you in long-term treasuries recently when you could have bought them one of the lowest prices in I don't even know how many years, 20, 30 years, like literally, like if you look at a chart, it's the lowest you could have ever got them, knowing it's a risk-free return. I talk to clients all the time, and I tell them to go back and tell their advisors, and their advisors tell them not to listen to me, that I'm an idiot, that I don't know what I'm talking about. Put your money in this this separately managed account full of stocks. And I look at their portfolios. I'm like, this is suicide for you. Like, you can't accept this risk. You can't even handle this risk. The drawdown will wipe you out, and you won't retire, and you won't maintain any of this. But yet, that's the advice people are taking because they give them that warm and fuzzy feeling where we're telling you the truth. But like that movie said, you can't handle the truth.
Yeah, you can't. They can't. And that's the sad part is that they use their relationship to overcome the objection. They never really answer the question. I've seen that these advisors have never answered the question. They just go, well, he's probably right in his category, but I'm your trusted advisor. Man, look, I'd rather you walk up to me and go, look, Troy, you're the dumbest guy I've ever met. I don't even like the way you look. You're probably just, trailer trash, but here's the truth and here's what you should do. I'd probably invest with that guy. Yeah, I'd rather hear the truth because everything else is just, you're trying to get into my pocket. But here's the tough part you and I have is we're going to watch this cataclysmic economic collapse that I think is already upon us and it's just playing itself out. And it's going to catch a substantial part of the upper 2% net worth holders in this country off guard. And they're going to lose money they never thought they would lose. They're going to be in a bad financial position that most of them missed 2008. They weren't in the 2008 collapse. This will be their first rodeo getting bucked off. And I've already seen what has resulted: depression. We've had a couple clients committed suicide earlier this year. I've seen the downside of this. I got clobbered in 2008, so I was smart. I go, you don't have to beat my ass twice. I learned from the first time, but it's going to be one of those where your podcast, the podcast I get on are going to be real important by saying it's not too late to figure out what you have and at least protect and position yourself today, because you do have to grow it the next 5 years, even in a down market, which I think we're headed into.
Yeah, 100%. This is a preservation of principle. This is preserve and protect. That's what folks should be doing. And they definitely should be talking to you. So let's get to the end. How would people get a hold of you or learn more about what you're doing and get, into some of the opportunities that you have?
Well, the first thing I tell you is go to our website, www.eckardenterprises.com. On that site, we built our own app called Eckard Insights. Now, the reason I would suggest you go to that first, you sign up. You don't have to be an investor, and you get access to hundreds of hours of educational videos on about everything that we do. So it just gives you a flavor of how we spend so much time and effort educating our investors. We want you to be the smartest oil and gas investor out there, which means you'll tell 99% no, because Troy's going to tell you why they're not any good. And I'll give you data that supports that. The second thing is you can always just go in there and ask for info. We have 7 salaried wealth managers. They have no transactional commissions, zero. They're salaried. And their job is to talk about what you have, where you're at, what you want to do, what your goals are. And then we'll tell you, what we have doesn't fit you. What we have, minerals are better, drilling wells are better, et cetera. But the key for me is that we have a system in place that is so slow, so passive. Anyone can call and ask questions and say, sounds good, but I'm not interested. We're going to thank you very much and move on with life. But go to Eckard Insights, go to EckardEnterprises.com, or you can always call the office at the 800 number, 800-527-8895, and you say, hey, listen, I heard you on Chris's show. I'd love to talk to somebody about whether this makes sense for me or not. You're going to find that it's probably going to be the highest level of customer service you've ever experienced. I'm OCD off the chart. There is nothing but perfection in my world. And my team, which is 48 staff members, is off the chart in servicing investors, because I tell them all the time, they're not an investor, they're an Eckard partner. And our partners are our number one asset. If we make them money, they'll be our partners for life. That's our number one goal.
Man, I love that. I love that. And folks, I hope you are all taking notes for your business, because that is the best model you're going to find out there. So we'll put all that information in the show notes, folks, and you'll be able to just go on there and get educated, because he's done all the hard work, put all the education together so that you can know, like, and understand what you're investing in. And if you choose not to, well, like he said, don't call. Just don't call. But with that, we're going to wrap this show. Troy, thank you so much for your time. This was a great conversation. And for all of you listening, thanks for joining us for another episode. And always remember, there's no sponsors, no ads. I'm not trying to make money with this podcast. I'm trying to save your ass and get you ready for what will be the biggest opportunity of your life. And you don't have to pay me for that. So with that being said, have a very good day, good riddance, and have fun. We'll see you next time.